There's a strange paradox in trading that nobody tells you when you first begin. The moment you stop chasing money is the moment money starts chasing you. I know it sounds strange, maybe even naive, but stay with me, because what I'm about to share isn't motivational fluff or theories pulled from textbooks with no real-world impact. This is the raw, uncomfortable truth that separates the 7% who survive from the 93% who vanish into the graveyard of failed accounts and broken dreams. The market has a personality. It breathes, it watches, and it tests you in ways no book can prepare you for. And if you're here right now, listening to these words, chances are you've already felt something shifting inside you. You may not have noticed it at first. Maybe it came slowly, like dawn breaking after the longest night of your life. But you know it. Something inside you has changed in a way that won't reverse. The charts that used to scream confusion now whisper clarity. The chaos that once froze you in fear now feels manageable. You're no longer running from it. You're facing it. That's not luck. That's evolution. And today we're going to uncover 5 subtle signs that prove you're no longer trading like the desperate crowd. You're beginning to think, feel, and execute like the professionals who actually last in this game. These signs won't show up in your profit and loss statement first. They'll appear in your mind, in your habits, in those quiet moments where the market tests your soul, and you don't even flinch anymore. Now let me ask you something personal. Do you remember the last time you checked your account balance? Was it after every single trade? Heart pounding, hoping you were on the right side? Or have you started measuring success by something deeper? Something the amateurs will never understand because they're too busy chasing the next cheap dopamine hit. But you're still here. You're still fighting. Because you can feel yourself getting closer to the level you know you're meant to reach. So if you're ready to face the truth about where you really are in your trading journey, then let's begin. And I have to warn you, the first sign is going to sting if you're not ready to hear it. Sign 1. You no longer trade for excitement. You trade for clarity. Here's what nobody wants to admit, especially not out loud. When you first start trading, you're not actually trading. You're just a gambler with a fancy interface and a brokerage account that makes what you're doing feel legitimate and important. You're chasing adrenaline disguised as opportunity. You're still at the very beginning, and you have no idea what you're up against. You underestimate the market and have absolutely no clue how heavy the price of your mistakes can be. That's why you move so carelessly. You look at the chart and feel like you have to take a trade. Every candle closing feels like a life or death decision you can't afford to miss. The fear of the market moving without you, the fear of missing out, drives every click, every entry, every impulsive mistake you'll regret 5 minutes later. And eventually, you do regret it. But you're new to this game, and you think making mistakes is just part of the process. You imagine you can change everything and beat the market. I know this so well because I walked the same path. When I first touched the markets, I genuinely believed trading was about constant action. I thought the more I traded, the faster I'd grow. The more positions I opened, the more opportunities I'd catch, the more money I'd make. I'd wake up hours before the opening bell, staring at pre-market movement like it held all the secrets to my financial future. I'd always convinced myself the same way. Today, everything will click into place, and I'll finally crack the market. So what would I do? I'd overtrade. I'd chase price. I'd enter setups I had no business entering simply because I couldn't bear the thought of not being involved in the market. Does that sound familiar to you? Be honest with yourself. How many times have you entered a trade not because it met your criteria, but because you just couldn't stand doing nothing. How many times have you convinced yourself a marginal setup was actually good enough just so you could feel like you were participating? That's not trading. That's addiction wearing a business suit. It's a compulsion to hit the order button. You get to a point where days can't pass without pressing those buttons. And because you're just starting out, you'll never know how badly this can destroy your life. But here's the truth I learned through years of pain and blown accounts. The market doesn't reward activity. It rewards discipline. The market doesn't care how busy you are, how hard you're working, or how many hours you're staring at screens. It only cares about one thing: how patient you can remain when every instinct in your body is screaming at you to act. How resilient you are, whether you can execute your plan despite all your impulses and desires. And being able to do that consistently every single day is not easy. The moment that constant gnawing urge to take action starts to fade, that's when you begin to understand what trading actually is at its core. This isn't a game of perpetual motion. It's a game of calculated stillness. It's the art of doing nothing with such conviction that when the right moment arrives, you strike with absolute certainty. You start checking your charts less frequently. You stop obsessing over every single tick and 5-minute candle. You sit in front of your trading platform, watch price action unfold, and feel genuinely peaceful. Not because the market became more predictable, but because you became unshakable. You took control of the reins. Your emotions no longer dictate your decisions. Your FOMO dies. And in its place, something far more valuable emerges: clarity. That's the shift. The quiet transformation most traders never even notice, because they're still drowning in the noise of indicators, news headlines, Twitter hot takes, and Discord trading rooms. They've become so desperate for someone to tell them what to do that they never develop the most important skill of all: the ability to sit with uncertainty without needing to resolve it immediately. Let me share something Jesse Livermore once said. This man made and lost multiple fortunes, so he understood pain on a level most of us hopefully never will. He said, "It was never my thinking that made the big money for me. It was always my sitting." Read that sentence again. Slowly. Sitting. Not analyzing, not predicting, not trying to outsmart the smartest traders in the world. Just sitting. Holding a position without doing anything, even when every instinct inside you is screaming, move, adjust, protect, do something. Being able to wait, just being able to stay in place. It sounds so simple, doesn't it? But it's not. We both know that very well. Being able to wait is not laziness. It's mastery. It's the ability to control your impulses when they're begging you to act. It's the ability to manage your fear when it's most intense. It's the ability to restrain your greed when it's most seductive. You stop trying to beat the market with intelligence. You wait for the market to come to you. And you realize, often painfully, that the best trades aren't the ones you force into existence. They're the ones that come naturally when conditions truly align with your edge, your system, your criteria. When you finally reach that stage, when you can sit in front of a live chart with real money on the line and feel absolutely no compulsion to act unless your specific edge appears, that's when you're crossing over from amateur to professional. You're no longer the market's victim. You're its student. But here's the uncomfortable truth nobody talks about. If you're still feeling that itch, that constant need to be involved, if you're still checking your phone every 15 minutes even when you don't have positions on, If you still can't go through a single trading session without entering at least one trade, you're not there yet, and that's okay. Really, everyone goes through these stages. Some give up. Some manage to survive in the market long enough to reach the point where they consistently turn a profit. Awareness is always the first step. Admitting that you're trading for the emotional thrill instead of the statistical edge is painful, but it's absolutely necessary. Because until you kill that addiction to action, until you conquer that hunger for constant stimulation, you will never see consistent profits. What you'll see instead is this: random wins that inflate your ego, followed by devastating losses that crush your confidence. And every single time, you'll blame the market, when the real problem is the person staring back at you in the mirror. And yes, this truth is deeply uncomfortable, but being able to face it is a huge step in itself. Think about it this way. Every professional trader I've ever studied, every single one who's built lasting wealth in this game, they all share one common trait. They're comfortable being bored. If you play the game right, boredom is inevitable, but profit follows right behind it. Never forget that. If conditions don't match their criteria, they can sit for hours, days, even weeks without touching their account. They don't feel guilty about it. They don't feel like they're wasting time. Waiting is a position, they say. Sitting in cash is a position. Not trading is a trade in itself. The amateur thinks every day needs to produce. The professional knows every day just needs to pass safely. The amateur measures success by how many trades they took. The professional measures success by how many bad trades they avoided. That's the mindset shift that changes everything. So if you're starting to feel this evolution happening inside you, if you're beginning to value peace over profit, clarity over chaos, quality over quantity, celebrate that. It's proof you're growing in ways most traders never will. Most traders get washed out before they ever reach this level. The market is an expert at destroying people's psychology, and that's exactly its job: to take your money and your sanity. But if you're still chasing the excitement, still feeling empty on days when you don't trade, still confusing activity with progress, you have work to do. And that work starts with one simple question: why do I trade? If the answer is because it makes me feel alive, you're in trouble. If the answer is because I have an edge and I'm waiting for it to appear, you're on the right path. The difference between those two answers is the difference between going broke and building wealth. Now let's talk about the second sign, and this one might cut even deeper than the first, because this sign deals with the thing every trader fears most: losing. Sign 2, you start viewing losses differently. They become feedback, not failure. Let me guess something about your early trading days. When you took a loss, especially when you lost an amount that was significant to you, it didn't just damage your account balance. It destroyed you emotionally. It shattered your confidence. The market wanted to make you feel like you'd never figure this impossible game out. You'd close that trade at a loss and immediately fall into one of two reactions: revenge trading, desperately trying to win back what the market took from you, or complete paralysis, freezing up and just watching even when the next setup was a perfect trade you should have taken. Am I wrong? Be honest. We've all been through this. That emotional devastation after a loss is completely normal and human. It's the nature of our brains. We're designed to avoid pain and seek pleasure. Losses trigger our survival instincts and activate the parts of our brain that respond to physical threats. So when you feel defeated after a losing trade, know that it's not about being weak, it's about being human. But here's the problem. Being human in the markets is a disadvantage. And that's the brutal truth most traders never accept. The market doesn't care about your feelings. It doesn't care about your debts. It doesn't care that you need the money or that you wanted to win today. It doesn't console you when you're hurting. It doesn't give you a break because you've had 3 losses in a row. It doesn't adjust its behavior to protect your fragile ego. The market is indifferent, mechanical, ruthless, and it only respects one thing: disciplined behavior regardless of outcome. If you become someone who's disciplined and sticks to their principles, then the only thing the market can do is bow down before you. So if you can manage to look at your losses with different eyes, if they no longer hurt you with that same devastating intensity, if you can close a losing trade and remain calm instead of doubting yourself or revenge trading, then congratulations. You're evolving. You're developing the emotional scar tissue that separates professionals from amateurs. Let me tell you about the shift that rebuilt my entire trading career from the ground up. I stopped asking the wrong question and started asking the right one. The wrong question was, why did I lose? That question is poisonous because it assumes every loss indicates failure. It assumes you did something wrong just because the outcome was negative. But trading doesn't work that way. You can execute everything by the book perfectly and still lose, because the market operates on probabilities, not certainties. The right question is this: did I follow my plan? That's it. That's the only question that matters, because once you start measuring success by execution instead of outcome, you become emotionally untouchable. No single trade can break you anymore. Your identity stops being tied to results. It gets tied to process. And process is the only thing you can actually control. Think about what happens when you shift your focus this way. You enter a trade with perfect risk management. You've done your analysis. You've identified your edge. You've placed your stop loss at a logical level. You've sized your position appropriately. Then the market moves against you and stops you out for a loss. Did you fail? Absolutely not. You played the probabilities correctly. You made a good choice that followed your rules. The fact that this particular instance didn't work doesn't mean your edge is broken. It just means variance exists. But the amateur trader doesn't see it this way. The amateur thinks every loss means they're terrible at trading. They take everything personally. They let every loss affect their life and their mental state, just like they think they're the king of the world when they make a profit. If you're like this, don't worry. Everyone walked this path. For amateurs, every trade they close at a loss becomes proof that they'll never succeed. So what do? They panic. They start tweaking their strategy after one bad trade. They abandon their system after 3 losses. They jump from method to method, from indicator to indicator, never giving anything enough time to prove itself statistically because they're so terrified of being wrong that they'd rather keep changing than commit to consistency. Yet failing and making mistakes is the only path to success. Not taking things personally no matter what, trying to read situations correctly, sticking to the edge you built, constantly testing and improving it, knowing how to take full responsibility when necessary. Without these, a trader wastes their potential. Now let's look at the other side of the coin. The professional trader. The professional understands that losses are simply the cost of doing business. They know it's the cost of staying in the game and learning lessons. They're data points in a larger statistical sample that defines edge over time. When you reach that stage of development, when you can look at a losing trade and extract the lesson without letting it destroy your psychological foundation, that's when you can be certain you're becoming a real trader. I remember my early years vividly, painfully. A single bad trade was enough to ruin my entire week. I'd become obsessed with it. I couldn't sleep at night. I'd replay it in my head hundreds of times, searching for the exact moment I made the critical mistake, convincing myself I was an idiot for not seeing the warning signs. I'd let that one loss color my perception of every subsequent setup. I'd either become overly cautious and miss perfect entries or overly aggressive and force trades that weren't there. Either way, that one loss would multiply into several more, not because my strategy failed, but because I allowed my emotional reaction to create a chain of mistakes. But the market doesn't care about your emotional state. It doesn't give you sympathy points for feeling bad. It doesn't offer you easier setups just because you're struggling. It only respects behavior, consistent, disciplined, unemotional behavior. So I had to fundamentally change my relationship with losing. I had to stop taking each loss personally, as if it was some commentary on my intelligence or worth as a trader. If we refuse to change our perspective, playing this game becomes unbearable. And like the majority, we get fed up with the markets and return to our normal lives. I started viewing losses the way a scientist views failed experiments. They're not failures, they're information. They're feedback telling you something about your hypothesis, your execution, or your market conditions. And that feedback is genuinely more valuable than wins in many ways because wins can make you sloppy. They can pump you up. Wins can make you overconfident. Wins can hide mistakes. But losses reveal everything. They show you where your discipline broke down. They expose the gaps in your risk management. They highlight the emotional triggers you haven't mastered yet. When you adopt that mindset, when you start treating losses as tuition rather than punishment, something profound happens. You stop fearing them. You still don't want them, obviously. Nobody enjoys losing money, but they don't paralyze you anymore. You can take a loss, review what happened objectively, extract whatever lesson exists, and then move forward with the exact same discipline that made you profitable in the first place. Let me share a story from my own trading that crystallized this lesson. I had developed a breakout strategy that worked beautifully in trending markets. My win rate was solid, my reward-to-risk ratio was excellent, and I had months of profitable data. Then the market character changed. It became choppy, range-bound. My breakout strategy started generating losses, not because the strategy was broken, but because the conditions it was designed for weren't present. The old version of me would have panicked. I would have questioned everything. I would have started modifying the strategy, adding filters, changing parameters, desperately trying to fix something that wasn't actually broken. But instead, I did something different. I accepted that my edge wasn't present in current conditions. I reduced my position size. I took my setups when they appeared according to my rules, accepted the losses when they came, and waited for market conditions to shift back to trending conditions. And you know what happened? 2 months later, the market started trending again. My strategy started working again. And because I hadn't abandoned it or destroyed it with constant modifications, I was able to profit from that trend when it emerged. I was rewarded for staying committed to my plan and strategy. That experience taught me something invaluable. Strategies don't fail, conditions change. Your job isn't to have a strategy that works in all conditions. Your job is to execute your strategy properly in the conditions it's designed for and protect your capital when those conditions aren't present. In other words, knowing how to sit still and do nothing when necessary. And that's the hardest part. If you're at the stage where you can experience a string of losses and your first thought isn't, my strategy is broken, but rather, are conditions still appropriate for my edge, then you've made enormous progress. You're thinking like a professional. You're separating execution from outcome. You're measuring yourself by the only standard that actually matters. Did you follow your rules? Here's another critical aspect of viewing losses correctly. You have to develop the ability to differentiate between good losses and bad losses. A good loss is when you followed your plan perfectly, managed your risk appropriately, and the market simply didn't cooperate. That's fine. That's expected. That's the cost of probabilistic thinking. A bad loss is when you broke your rules, when you sized too large, when you kept the position open despite it passing your stop point instead of closing it, when you entered a marginal setup because you were bored. Those losses need to be taken seriously because they represent discipline failures, not strategy failures. And if you can manage to eliminate discipline failures, you'll see that being a profitable trader isn't really that difficult. What's holding you back isn't the great trades you didn't catch. It's the trades you took that you knew you shouldn't have. Trades that didn't fit your system. Trades where you broke discipline, where you chose to continue holding despite price moving past your stop. The professional trader reviews their losses and asks, was this a good process loss or a bad discipline loss? If it was process, they move on. If it was discipline, they identify the trigger, journal about it, and create a specific plan to prevent it from happening again. That's the work. That's what separates professionals from amateurs. And here's something that might surprise you. As you develop this healthier relationship with losses, you'll notice something else changing. You'll start handling wins differently too. You won't let them inflate your ego anymore. You won't convince yourself you're a genius after 3 winning trades. You'll stop watching complacency take your money and drag you back to where you started, again and again. You'll recognize that wins and losses are just 2 sides of the same coin, both inevitable, both temporary, both meaningless in isolation. What matters is the aggregate, the pattern over time, the statistical edge playing out across hundreds of trades. When you can look at your equity curve and see it for what it really is, a visual representation of your discipline consistently applied over time, rather than a scorecard validating or invalidating your intelligence, that's when you've crossed over. That's when losses become information instead of identity. And that's when you become very, very dangerous as a trader. So if you're listening right now and noticing that your emotional reactions to losses have softened, that you're able to take a hit and recover quickly, that you're reviewing your trades objectively instead of emotionally, then understand something. You're not just improving as a trader, you're maturing as a human being. Because the lessons you learn in the market about handling failure, about controlling your reactions, about separating your self-worth from your results, those lessons bleed into every area of your life. That's the hidden gift of trading that nobody talks about. It teaches you how to lose without being destroyed. It teaches you how to fail without losing your identity. It teaches you that you are not your results. You are your process. And once you internalize that truth, truly internalize it at a level deeper than intellectual understanding, you become someone the market can't break. You mature. You become mentally stronger. Because the market can take your money. It can stop you out. It can humble you. But it can't take your discipline. It can't take your process. And as long as you protect those things, you can always come back, rebuild, and eventually succeed. Before we continue, Let's take a moment to recognize where we are on this journey. In the first part, we covered two fundamental signs that you're evolving from amateur to professional. You're trading for clarity instead of excitement, and you're viewing losses as feedback rather than failure. These shifts might seem simple on the surface, but they represent years of psychological evolution that most traders never achieve. Now we're going to go deeper, because the next two signs we're about to explore deal with something even more challenging than controlling your emotions or managing losses. They deal with trust. Specifically, trusting yourself in a world designed to make you doubt everything you know. So if you're ready to continue this journey, let's dive into the third sign. Sign 3. You start trusting your own judgment. The death of guru dependency. Here's an uncomfortable truth about the trading education industry. It's built on your insecurity. Every course promising the secret, every signal service guaranteeing 90% win rate, every guru claiming they've cracked the code, they all profit from one thing: your desperate need for someone else to tell you what to do. And when you first start trading, when you're drowning in information and confusion, that dependency feels completely reasonable. You don't know what you're doing yet, so obviously you need guidance, right? Wrong. Or rather, partially wrong. Because here's what actually happens. You start collecting strategies like they're Pokemon cards. You watch one YouTube video about moving averages, so you add those to your chart. Then someone mentions RSI, so you layer that on top. Then you hear about volume profile, price action, Fibonacci retracements, Elliott wave, market structure, supply and demand zones, and suddenly your chart looks like a Jackson Pollock painting, and you're more confused than when you started. You jump from guru to guru, hoping one of them will finally give you the answer. You join trading rooms where people call out entries in real time, and you blindly follow them without understanding why. You subscribe to signal services that tell you exactly when to buy and sell, removing all decision-making from your process. And you know what happens. You can't learn. You can't develop. You can't grow. You just become dependent on others, sabotaging your own journey and even prolonging your path unnecessarily. I lived this nightmare for years, too. I genuinely believed that somewhere out there, someone had figured it all out, and if I just found the right teacher or the right system, everything would click into place. So I bought courses. I joined expensive mentorship programs. I paid for signal services. And you know what I discovered? Every single one of them had some value, but none of them had the answer I was searching for. Because the answer wasn't external. It was internal. The breakthrough came when I realized something that changed everything. There is no holy grail. There's no secret indicator the professionals are hiding from you. There's no magic combination of settings that suddenly makes the market predictable. The edge isn't in the tool. It's in the person wielding the tool. And the moment you stop looking outside yourself for validation, the moment you start trusting your own eyes, your own analysis, your own judgment built on your own experience, that's when trading finally clicks. Let me tell you what this evolution actually looks like, because it's subtle. It doesn't happen overnight. You don't wake up one morning suddenly confident in everything you do. It's a gradual process that starts with small moments of recognition. You look at a chart, and before you check what the indicators say, before you see what other traders are posting, before you look for confirmation from external sources, you notice something. You feel something. Not an emotional feeling, not hope or fear, but a recognition pattern. I've seen this before. I know what tends to happen here. Now your experience is starting to help you intuitively. That's intuition, Not the gut feeling kind of intuition that amateurs confuse with emotional impulses. Real intuition. The kind built on thousands of hours of screen time, hundreds of trades taken, patterns recognized and internalized through repetition until they become second nature. When you reach that level, you can look at a chart and just know whether a setup fits your criteria or not without needing to run through a checklist or ask someone else their opinion. Here's how you know you've reached this stage. You start making decisions independently. You see a setup that matches your criteria and you take it without hesitation, without seeking confirmation from a trading room or a guru's Twitter account. You see a setup that almost fits but doesn't quite meet your standards, and you let it pass without FOMO, without wondering if you made a mistake by not taking it. You trust your process because you built it, tested it, refined it through your own experience. You've given years to this. But let me be very clear about something. Trusting your judgment doesn't mean becoming arrogant or closed-minded. It doesn't mean you stop learning from others. It doesn't mean you ignore valuable information or refuse to adapt when conditions change. What it means is that you stop being dependent. You stop needing external validation for every decision. You become the final authority on your own trading. And you must. You have no choice. Because everyone can leave, abandon you halfway through. But if you build something with solid foundations yourself, you'll never need anyone. I remember the exact moment I realized I'd made this transition. I was in a trading room I'd been part of for months. Someone shared a trade they were taking, and normally I would have followed along automatically, trusting their analysis over my own. But this time, I looked at the chart and thought, I don't see it. This doesn't fit my criteria. And I didn't take the trade. The position ended up being a winner, and the old version of me would have been devastated, convinced I'd made a terrible mistake by not following the guru's call. But instead, I felt peaceful because I hadn't broken my rules. I hadn't betrayed my process. I'd made an independent decision based on my own criteria, and even though the outcome wasn't what I would have wanted, my execution was perfect. That was the moment I realized I didn't need anyone else anymore. I had become my own trader, not someone else's follower. Now here's the challenging part about this evolution. When you start trusting yourself, you also start noticing how much noise exists in the trading world. You realize that 90% of trading content is just recycled information presented with different graphics. You recognize that most signal services are just gamblers with marketing skills. You see through the performance screenshots that cleverly leave out the blown accounts. And you become very, very selective about who you listen to. You stop consuming endless amounts of trading content. You stop watching every YouTube video that promises to reveal the secret. You stop jumping from strategy to strategy, hoping the next one will be easier. Instead, you commit. You choose one approach that makes sense to you, that fits your personality, your schedule, your risk tolerance, and you dedicate yourself to mastering it, not learning it. Mastering it. There's a massive difference. Learning something means you understand it intellectually. You can explain the concept, you know the rules. But mastering something means you've internalized it so deeply that execution becomes automatic. You don't think about the process anymore. You just do it. Like a musician who's played a song 1,000 times, your fingers move to the right notes without conscious thought. That's mastery. And you can't reach mastery if you're constantly switching between different systems. Jesse Livermore understood this concept profoundly. He developed his own method of reading the market, his own way of identifying opportunities, and he trusted it completely. He didn't follow tips. He didn't chase hot stocks because someone told him to. He developed his judgment through years of observation, testing, and painful mistakes. And once he trusted that judgment, he became one of the most successful traders in history. But here's what most people miss about Livermore's story. He also lost everything multiple times. Why? Because trusting your judgment doesn't make you infallible. It just makes you consistent. And sometimes the market goes through periods where even the best judgment doesn't produce profits. That's when discipline becomes critical, which brings us to the fourth sign. Here's a question for you. Think about your current trading. When you see a setup, do you immediately look for confirmation from others? Do you check trading communities to see if anyone else is seeing what you're seeing? Do you hesitate to pull the trigger unless someone validates your analysis? If yes, you're still in the dependency phase. But if you can see a setup, recognize it fits your criteria, and execute without needing anyone's permission or approval, then you're developing real independence. And that independence is priceless, because the market doesn't care what your guru thinks. It doesn't care what the trading room is calling. It only responds to price, volume, and momentum. And if you can read those elements through your own lens with confidence built on your own experience, then you're finally trading instead of following. You're a professional instead of a student who never graduates. The final evolution of this sign is when you start teaching others not what they should do, but how to think for themselves. When you reach a level where people ask for your analysis and your response is, "What do you see?" instead of, "Here's what you should do," that's when you know you've truly internalized this principle. You're not creating more dependent followers. You're encouraging independent thinking. So if you're at the stage where your best trades are the ones you took based solely on your own analysis, where you feel comfortable disagreeing with popular opinion when your system says something different, where you've stopped hoping someone will just tell you what to do and started trusting the process you've built, then celebrate that. You've achieved something most traders never will. You've become autonomous. Now let's talk about the fourth sign, and this one separates traders who build careers from traders who have lucky years. Sign 4. You wake up. Protecting discipline, not chasing opportunity. The defense. First mindset. Here's a question that will reveal everything about where you are in your trading evolution. What's the first thought that enters your mind when you wake up on a trading day? Is it, "What can I catch today?" Or is it, "How do I protect my discipline today?" That subtle shift in focus, from offense to defense, represents one of the most critical transitions you'll ever make as a trader. When you're new, you wake up hunting. You're scanning for setups before you've even finished your coffee, checking pre-market movement, scrolling through trading communities. You're in attack mode, focused entirely on opportunity, on not missing the move. You exhaust yourself because you think every day needs to produce. That's the amateur mindset. Always chasing, always searching, always feeling behind. But the professional trader wakes up thinking about preservation, protection, discipline. They understand that capital isn't something to deploy aggressively every day. It's something to guard carefully and deploy only when conditions are optimal. I used to believe that not trading meant wasting time. I'd force trades just to feel productive, and those forced trades destroyed my account methodically. The breakthrough came when I started tracking which trades were planned and which were impulsive. The data was devastating. My planned trades were profitable. My impulsive trades were bleeding my account dry. So I made a decision. I would treat my discipline like a limited resource that needed protection. I stopped asking, "What can I trade today?" and started asking, Do conditions favor my edge today? That's the shift from aggressive to selective, from offense to defense. Think about professional athletes. They don't just train hard, they protect their bodies obsessively. They know that staying healthy is more important than training an extra hour. Trading is the same. Protecting your discipline is more important than catching every move. Because if you blow up your account through overtrading, all the edge in the world becomes useless. I remember when the market had been trending beautifully for weeks. My strategy was working perfectly. Then conditions changed, choppy, range-bound, unpredictable. But I didn't want to stop trading. I'd gotten used to winning. So I kept trading even though conditions no longer favored my edge. And I gave back 2 weeks of profits in 3 days. I was prioritizing opportunity over discipline. That lesson taught me conditions matter more than effort. Now when I wake up, my first action isn't checking what's moving. It's checking whether conditions match my criteria. And if they don't, I'm comfortable doing nothing. Because sitting on my hands during bad conditions protects my ability to capitalize during good conditions. That's defense-first thinking. But here's what makes this mindset difficult. Society conditions us to believe success comes from constant action, hustle culture, grind culture. But trading rewards patience and selectivity. The market doesn't reward effort, it only rewards correct decisions. And sometimes the most correct decision is to close your platform and walk away. I started viewing each trading day as a test of my discipline. The question wasn't, can I make money today? It was, can I follow my rules today regardless of what happens? Good days were days I followed my process. Bad days were days I broke my rules. That shift from outcome-focused to process-focused built the foundation for everything that came after. When you prioritize discipline over opportunity, you stop overtrading, forcing setups, revenge trading, chasing. Not because you developed superhuman willpower, but because your priorities changed. You're measuring success by how well you execute your plan, not by how much you make. And here's the beautiful paradox. When you stop trying to make money and start protecting discipline, you make more money. Over time, consistently, because you're not giving back gains through undisciplined behavior. Your discipline is your real edge, not your strategy, not your indicators. Your ability to follow rules when emotions scream at you to break them. Your capacity to sit still when every instinct says to act. That's what separates professionals from amateurs. Here's a practical exercise. Go through your trading journal from the last month. Identify every trade where you broke your rules, size too large, entered on emotion, held past your stop. Now imagine those trades didn't exist. How would your month look? For most traders, results would be dramatically better if they simply removed their undisciplined trades. That's the power of defense-first thinking. Sign 5. You start thinking in probabilities, not outcomes. The ultimate mental shift. When you close a losing trade, what's your first thought? Is it, I was wrong, or is it, the probability didn't play out this time? That distinction represents the Grand Canyon between amateur and professional thinking. When you think in outcomes, every trade becomes a referendum on your intelligence. Every win validates you. Every loss invalidates you. You need to be right. And when you're not, you spiral, questioning everything, tweaking your system, abandoning your process. You become emotionally unstable because you've tied your identity to results you can't control. But when you think in probabilities, everything changes. You stop judging individual trades and start evaluating your process over series of trades. You understand that your edge shows up over hundreds of trades, not one. You can do everything perfectly and still lose, and that's not just okay, it's expected. It's built into the mathematics of trading. Think about a casino. When someone wins at blackjack, does the casino panic? No. They understand probabilities. Over thousands of hands, their mathematical edge plays out. One person winning is just variance. That's exactly how you need to approach trading. Your strategy might only win 50% of the time, but if your average winner is twice the size of your average loser, you're profitable. That's how the game is won. Not by being right every time, but by making good bets repeatedly until probabilities work in your favor. When I was younger, every trade felt critical. My ego was wrapped up in accuracy. If a trade worked, I felt brilliant. If it failed, I felt stupid. That emotional yo-yo destroyed my consistency. I'd have winners and start sizing up. Then I'd hit losers and completely fall apart, becoming overly cautious and missing perfect setups. The breakthrough came when I started keeping detailed statistics. Over hundreds of trades, I saw my edge was real, but inconsistent short-term and reliable long-term. I could lose 5 trades in a row, and it meant nothing. What mattered was that over 100 trades, my winners were significantly larger than my losers. That created positive expectancy. Once I internalized that truth, everything changed. I stopped reacting to individual trades. I stopped letting wins inflate my ego or losses crush my spirit. I became a machine executing probabilities, and my results stabilized dramatically. Let me share an example. I developed a breakout strategy that won 45% of the time with winners 3 times larger than losers. Fantastic edge. But when I traded it live, I hit 7 losing trades in a row. Every instinct screamed at me to stop. But I looked at my trade log. Every loss followed my rules perfectly. So I kept trading it. The next 15 trades included 11 winners. My account not only recovered but reached new highs. The strategy wasn't broken. I was just experiencing normal statistical variance. That experience taught me, your job isn't to predict the next trade. Your job is to execute your edge and let mathematics work over time. That's probabilistic thinking, and once you develop it, you become unshakable. Here's another critical aspect. You stop caring about being right and start caring about making money. An amateur might have a 70% win rate and lose money. A professional might have a 40% win rate and make a fortune. Win rate is nearly meaningless in isolation. What matters is expectancy, whether your winners are larger than your losers by enough margin. The hardest part about probabilistic thinking, it's boring. No drama, no ego validation. You're just executing the same setups repeatedly, completely detached from individual outcomes. That's not what gets celebrated on social media, but it's what builds wealth. Thinking in probabilities doesn't mean you stop learning. It means you separate execution analysis from outcome analysis. You review trades to see if you followed your process. If you did, the outcome is irrelevant. I've had winning trades that were terrible because I violated my process. I've had losing trades that were excellent because I executed perfectly. Go through your last 50 trades. Don't look at whether they won or lost. Look at whether you followed your rules. Grade each trade on execution, not outcome. If your execution percentage is high, results will follow. If it's low, you'll eventually blow up. That's the power of probabilistic thinking. It forces you to focus on the only thing you can control, your behavior. The journey beyond profitability. Now let me address something most never talk about. What happens after you become profitable? Here's an uncomfortable truth. Staying profitable is harder than becoming profitable. When you start winning consistently, something dangerous happens. You feel invincible. You think you've figured it out. That subtle shift from humble discipline to quiet arrogance. That's when the market sets its trap. After years of struggle, I finally achieved 6 months of consistent profitability. Everything felt easy. And that's when I made the classic mistake. I started sizing up too aggressively, taking trades close enough to my criteria. I lost 3 months of profits in 2 weeks, not because the market did anything unusual, because I abandoned the discipline that made me profitable. That taught me mastery isn't a destination, it's maintenance. You never arrive at a place where you can relax. Every single day, you have to protect the behaviors that make you successful. Here's how to protect yourself. First, never increase risk just because you're winning. Second, continue journaling every trade, especially when profitable. Third, regularly review your statistics. Fourth, stay humble. Remember, your edge is narrow and conditional. That healthy respect for the market keeps you disciplined when discipline feels unnecessary. Jesse Livermore made and lost fortunes multiple times. He was one of the greatest traders who ever lived, and he still couldn't maintain consistent discipline over decades. His story is a warning. Talent isn't enough. What matters is sustained discipline over time. Final thoughts. We've covered 5 signs you're becoming profitable. You trade for clarity instead of excitement. You view losses as feedback instead of failure. You trust your judgment instead of depending on others. You protect discipline instead of chasing opportunity. And you think in probabilities instead of outcomes. But these aren't just trading skills, they're life skills. The patience you develop makes you more patient in relationships. The discipline you build makes you more disciplined in health. The emotional control you master makes you more stable through all challenges. Trading is a vehicle for personal development, disguised as a financial pursuit. The market will expose every weakness in your character. And in overcoming those weaknesses, you become someone stronger, calmer, more intentional. That transformation is worth more than any money you'll make. So measure your journey not just in dollars, but in the person you're becoming. Are you more disciplined than last year? More patient? More self-aware? Those are the real metrics of success. If you're seeing these 5 signs emerge, understand something important. You're not just becoming a profitable trader. You're becoming someone who can succeed at anything requiring discipline, patience, and emotional control. That's the real gift trading offers. Your journey doesn't end here. It's just beginning. Now you know what signs indicate progress, what behaviors to protect, and what habits to eliminate. So keep going. Keep showing up. Keep executing your process. Keep protecting your discipline like your career depends on it. Because it does, and you're going to make it. Not because this will be easy, but because you're willing to do what 93% of traders refuse to do. You're willing to change yourself instead of waiting for the market to change. That's the difference between those who make it and those who don't. Stay disciplined. Stay humble. Stay consistent. The market rewards those who can wait, who can endure, who can follow their edge through doubt, through fear, through boredom. That's mastery, and you're building it one trade at a time. Welcome to the 7%. You've earned your place here.